What's up and welcome to a new update in which we're going to discuss the Bitcoin price action, of course, and today it's also time for unemployment rate numbers which came in today and were more positive than we were expecting, and that's why we saw risk on assets selling off and the focus shifts towards CPI and PPI coming in next week. Before we can continue, make sure to hit that like button, subscribe to this YouTube channel as well if you enjoy the content. On Monday and Thursday, I'm live at 7 p.m. Central European time to cover everything that you need to know in the markets. Now, when we're looking at the markets, we are also trading that in our premium membership. You can test them for 1 week for free, and now we've got a discount going on this weekend, which means that you are able to join our premium membership for 14% lower than the regular price. Why is that? We have made 14R in the past month, which means that if you were risking 1%, that would mean 1R, and if you would have risked 1% per trade, you would have made 14% in 1 month. So that's why during the entire weekend, you can join the group for a 40% discount. So check it out in the description beneath. Also, if you want to join us at Bitcoin Conference, we are still giving away 3 times 2 tickets for the Bitcoin conference, which you can also find in the live stream from yesterday and how to join that actual event, and then perhaps we can meet each other next week. Now let's get to the topic of today. We're going to dive into unemployment rates, we're going to dive into TA, so let's head towards the charts. So when we're discussing the importance of today, it's definitely the focus of this entire week. So if we just go through the entire week, we knew that on Monday we had some economic data coming in which the economic data was worse with ISM. On Tuesday we had job openings, which was worse too. And now we've got the unemployment change and also payrolls coming in. On Wednesday we had it in a positive manner already. Yesterday the unemployment claims rallied a bit. So today the big data came out and the unemployment rate is lower than we were forecasting. So that's positive for the economy. That is positive for Powell that wants to hike. It is negative for everything implying risk on, because if we continue to hike, it means that Powell will have an impact on the economy, which he doesn't see yet, and therefore the DXY pumps up and yields will continue to go up. The expectations for the BIPs next meeting is going to increase to 75, and then we go down with the other assets. That's basically the outcome here. However, unemployment rate dropped to 3.5%, while also the labor participation dropped a bit, which means that there's less jobs at this point overall. However, the unemployment rate dropped as all those jobs are getting filled still. So we still have to keep an eye on the next week, and we're going to discuss that in a bit. Now, when we're looking at the other numbers, not much to say. Non-farm employment change was positive, but dropped significantly since the past months, as we can see. So we might be a bit too early to conclude that the economy is getting weaker. We might be waiting for 1 more month until we get there, and we have got some important ones coming up next week. On Monday we've got bank holiday. As we can see, on Tuesday we don't have that much. On Wednesday, that's where we get the numbers in GBP. We got GDP coming in from Great Britain, but also PPI, which is a big trigger for the Fed to look at. So PPI is coming in, which the expectations is that it's going to be positive. If it stays negative, then we have a positive number, at least for risk on. Core PPI is going to come in. And then on Wednesday, we've got CPI year on year, month on month. That's definitely the key trigger. And then also on Friday, we've got a few more numbers coming in, which is retail sales. So it's going to be a big week once again, as we are approaching the next FOMC meeting. Now, we have been covering the entire topic about unemployment. And based on the unemployment, we see that the DXY is going up a little bit. And we are still facing this upward trend. And we are still facing this entire period of probably getting towards a top of the markets overall. So I've been clearly stating that this was a resistance zone. Overall, I'm looking at a period of sideways action on the DXY, just like 2015, 2016. So I think that we're still getting there, and I'm still favoring shorts on the DXY and longs on Bitcoin, which I've been saying since here as well. Now the first row region to get a bounce from on the DXY did give a bounce, and we are bouncing in a strong manner. So the DXY is showing strength as unemployment has been dropping. Also the 2-year yields have been going up even more as we are still into this fight here. Overall we are into 3 weeks of sideways action, but today we are seeing strength on the 2 years as it's most likely going to take out the high. Now Euro USD, same, dropping a bit. Got towards resistance, now it's dropping. I'm looking at 67 cents to see a support over there. When we're looking at Bitcoin, we have been getting a breakout and now we are retesting the level that we want to be retested, right? So we discussed this earlier in the live stream. This entire block, which is the range high, is an area that I would love to see for support. However, due to the economic data, it's definitely not showing too much strength. So technically speaking, you want to see a swift bounce from this area, might be dropping to 19.4 and then have that swift bounce towards 19.8 again. I doubt we will see it. And in that way, we're probably going to continue falling down towards 19.3 again. And I said that if we drop beneath 19.3 to 19.6 could activate a short trigger, and then we're looking at the lows here. So right now we are into a territory that is very important to sustain as support. If it drops beneath, I'm looking for lows around the range low here, or at least for supports there to actually get the trigger going. For now we have been dropping swiftly due to unemployment change, and we are definitely watching how the weekly is going to close here, but we are looking at 19.4 dips mostly. If we get to 19.3 on this area, then I primarily want to look for shorts overall. So the market is showing weakness. We can also see that on Ether against USDT, which have been falling down even more again. Now if we're looking at Bitcoin, crucially for bullish connection or bullish continuation, you definitely want to see it hold here, then crack 19.8. If it does crack that level, we can start targeting 20.7 again. If it loses the level and drops to 19.3, I'm assuming we can start looking for shorts at 19.6, aiming at range lows. So unemployment came in positive, which is bad for risk on. The impact is not too much yet, but I think that we can have some more coming into the markets if we lose these levels. So that's the update for now. Let's get towards the conclusion. I hope you did enjoy this update on the markets, and I hope you will be joining me next week as well. It's a boring market at this point. We are waiting for a big pivot to come, and we are also waiting for bad economic data, which sounds a bit worse, but we're looking at bad data that is going to be good for the market. So it's a, patience game, and next week is going to be a massive one again as PPI and CPI coming in. Until then, don't do stupid shit, remain calm, and I'll see you again next day, which tomorrow we're going to discuss a project that I'm really liking a lot. Ciao!